Welcome everybody to another 144 analytics video where we go over how to use the Fibonacci retracements with the 144 rules and guidelines. This one's going to be in the March oil, soybean oil. And just going quickly over the retracements, we know that any market that's going to keep its trend is going to hold 38.2%. Any market that's extremely strong or weak is going to stay below 23.6%. And then the 78.6% retracement is something that can end the move completely and or just send you 78.6 the other way. 61.8 is basically that same thing, where if you hit 61.8, you can look for 61.8 of where you just came from. So here we go. We're going to start with this rally. This was the low back in May of last year. And the first rally here and went, let's see, we'll take the retracements. This low to this high. We can see that 38% was here. Now, obviously, it traded well below it, but the close was back above it, and that's always what's key. We want to see it, preferably that it gets under, gets right back above, and or hold. One close is acceptable, two is not. So we see here as this market continues to rally, it went on to new highs as we would expect, and then holds 23%, telling you this market's extremely strong because it can't even set back to what would be a normal setback of 38%. And then we get up to the highs here, and we see that once again we hold 38%. Now here's where everything changes and what you have to keep why we watch all the retracements regardless of what the longer term target is. In this case, 38% should have sent us to a new high, and it didn't. But anytime you fail to make a new high that comes in a 78.6% range, which you see here, spiked above, closed below it, we, look for 78.6 the other way, which we got right here. And then we would look for 78 back the other way. The other thing is that 78 could be the end of this whole move, which, in theory, that's what ended up happening. It's possible it could have just stayed here, but it didn't. But you see, these things are these are where the highs and lows are happening. Okay, that's all I can really say. It's not like we're making this stuff up, or we're using one thing one time, one thing another time. These are all set guidelines and rules to follow with the 144 rules and guidelines. So you see this market does turn, and now we see that the first attempt to rally could only go 23%, telling this was an extremely weak market. And here we get down to 78.6% on the on this right here of this whole move up, which could have sent us 78.6 the other way. And again, why we watch all the retracements is because here's all it could do. It was 23%. Close above it, back below it. Close slightly above it, right back. So you sat on this level here for almost 2 months before this 23% sent it down to new lows. Now, sometimes the market gets so weak that your level is up here for 23%, that we have to go to the next most important high. And in this case, it would be this one where it, broke from 23%. So we take this one down as a secondary one, and we can see all it could do was 38%. But you see, it's an exact proportion. I mean, it's a measurement. It's a Fibonacci retracement. And this is why we keep saying we want you to understand why we believe that the Fibonacci retracements are the underlying structure of all markets. We've done this on every market. We only do weekly updates on the grains and livestocks. If you like that, hopefully you'll come and subscribe to us. But here right now, we're looking at 38 made the new low. All we have here now is that on the long-term chart, our downside target will be down here where you have like in a 38.5 area, where you have 78.6 on the long-term chart and a major Gann square. And up above, until something can change, We're going to watch the tightest retracement possible, and that's 48.94. So yeah, just for this week, you could use this 45.79 major Gantt square as the swing point. Below it, always looking for just the next major Gantt square, but in this case, following the Fibonacci retracements, our long-term target is down around 38.5. Nothing is going to change as far as this whole down move until 38% is taken out. So you can see here, as we're just trying to show you, the market, when it rallies, comes back into the retracements, and when it breaks, it comes back up and stops at the retracements. So with a few of our rules and guidelines, hopefully these videos are helping you to understand it. What's going on in these markets, and that they're helping you. Hopefully this is just another tool in your tools of trading, and helps in your decision making of what keeps a trend negative and what turns it, and positive, vice versa. So until then, the next video, good trading, and see you later.